Hey everyone, welcome to the third issue of the Cryptocademy newsletter. My name is Justin Bennett, and in this issue, we're going to talk about cycles. I'm going to show you where I think this bull market could end, and also my exit strategy for later this year. We're then going to get into some charts, and I'm going to show you where we could have some buying opportunities develop over the next 24 to 48 hours. All right, so first up is the Bitcoin cycles, and we're looking here at the long-term Bitcoin chart. All right, so we're on the monthly time frame. And obviously this back here was the 2013 bull market where it broke above this all-time high, which back then was $32. Wouldn't it have been nice to load up back then? So here's the bull market where we broke above that level, and again in 2017. So these yellow shaded areas mark the first monthly close above the previous all-time high. So you can see where back here, Bitcoin broke out. We had the first monthly close above that level. And if we just count this out and keep things really simple, all right, so from that first monthly close to the cycle peak was 9 bars. Okay, that's 9 months. And if we look at the 2017 bull market, again, this right here was the first monthly close. Counting that out, we get 9 bars, 9 months. So if we apply that to the current bull market, December 2020 was the first monthly close above $20,000. So doing that again and counting this out, from the December candle, you can see if we count out 9 bars or 9 months, we get August 2021. So this is why I think that August of this year or sometime around there is going to mark the end of this bull market. Now, one thing to keep in mind is that the last bull market, Ethereum actually topped out a few weeks after Bitcoin. So what I think could happen is we could see Bitcoin top out sometime in August. It could be mid to late August. And then about 2 to 4 weeks later, we could see Ethereum and the rest of the altcoins peak during this cycle. Now, obviously, I've heard a lot of calls for a top in 2022, but looking at this chart, that's not what this indicates. And I'm the kind of person where if I see a pattern like this, I'm going to believe this pattern until I have reason to think otherwise. So until this pattern breaks down, I have to assume that the same thing is going to play out, where we got 9 months above the previous all-time high, 9 months above the previous all-time high, and this year we'll get the same exact thing. So until this breaks down and we see Bitcoin continue to move higher after August, September, I have to assume that this pattern is going to continue. Now, as far as how I plan to get out, it's again very simple, and it's also similar to how I got in. When I got in, I was essentially just dollar cost averaging in over the course of a few months. I was literally buying some coins every single day for 2 or 3 months. And I plan to do the exact same thing when I get out. So basically starting in late July, I will likely start to pull out a couple of percent of my portfolio per week. I'm going to keep it slow at first, and then in August, I'm going to speed that up where I start to exit with 3 or 4% per week. So the goal is that by the end of August, I have at least half of my profits booked. And that way, even if we do get a dip and the top of the market is in August, even mid-August, I have half my profits booked and I can continue to do the same thing where I exit slowly each week. Now, obviously, if things get really volatile and start to move faster, I can exit a little bit faster as well. So it's going to depend on how the market looks at the time. But that's really my strategy, where I'm going to exit a couple of percent of my portfolio each week during July and then speed that up into 3, maybe even 4% per week in early August. And of course, if the summer gets really heated, I may also start to take off some in June if we do see Bitcoin and Ethereum really start to go parabolic. So again, it's going to be kind of how the market plays out between now and then. Nothing is set in stone for me. It all depends on how the market plays out over the next few months. All right, so hopefully that gives you a pretty good idea of when I think this bull market could end and also how I plan on getting out later this year. So let's get into some charts. And the first one I want to take a look at is the total market cap. So I've mentioned this a lot on Twitter, where I basically use this chart as my barometer for the rest of the market because it essentially illustrates the entire market. So looking at the intraday charts, you can see where we have this trend line that I've been talking about on Twitter a lot. And I initially thought we could get a retest of this area right around 1.6 trillion, which also lines up with a key horizontal level. But of course, these markets are so bullish. Every time I thought we were going to get a major pullback, like back here, the dip was bought up quickly and we moved back up. Now you can see where we also have an ascending channel, a small ascending channel right below all-time highs. So right now, the $1.75 trillion area is the all-time high. The the market has to close above that in order to confirm the breakout. Until then, there is a chance that we could see another pullback. Now, keep in mind that this key support level is starting to come pretty close to that trend line. So if we do get a pullback down here into the area right around 1.65 trillion, that might be all we get. If we do break below that, that could indicate a deeper retracement back toward 1.6 or just below it. But as of right now, this market looks extremely bullish, and so I'd be very surprised if we did get a breakdown like that. Now, looking at Bitcoin, it's no surprise that we see something similar on the intraday timeframes where we have this trend line where the market found support earlier today. All right, so this trend line right through here, you can see where it extends off of these highs, and it has been intact over the last week or so. Now, I thought we could get a pullback here into $53,000, but like I just mentioned, this market is so bullish that every single dip is just being bought up quickly. And as of right now, you can see where 58,000, of course, is the all-time high. And if we see Bitcoin later today start to pressure that area once again, we can clearly see that we're getting higher lows into resistance. And typically that is bullish and indicates an imminent break higher. But we would need to see Bitcoin close a day above $58,000 to confirm the breakout. Now, looking at the daily time frame, all right, you can see where we have this larger channel that dates back several months. And right now, Bitcoin is moving in the upper half of this channel. And this isn't bearish. A lot of people would see this and say, well, this means that we have to come back to this level, which means $40,000, etc. And I don't think that's going to happen. Instead, I think we could see something like this, where we start to pressure the top of this area, get another pullback, and then actually go above it later this year. Because this market is just so incredibly bullish that I don't see a large retracement like a 40 or 50% pullback down toward this channel bottom. Now, I could be wrong, but I do think that we are headed for $70,000 to $80,000 over the next few weeks rather than moving lower toward $40,000 or even $50,000. And if we look at the January correction, one thing to notice here, I noticed this the other day, that I talked about this in a previous video where this rally right here was about 110%. We then had a pullback just over 30%. Now, this rally was about 100%, so it was a little bit less than the one back here, and this correction was about 26%. So basically the rallies and corrections are getting smaller, which means from this low down here, I wouldn't be at all surprised to see an 80 or 90% rally, which should give us a price somewhere up in the $70,000 to $80,000 range. And furthermore, if you look at the fibs from that January correction, all right, the extension that was reached recently before this February correction was the 227 extension. All right, so notice this level right here in yellow. Now, if we do the same thing and use that same extension from the latest correction, all right, you can see if we use that same level, if it plays out similar, this area is just below $80,000. And that lines up with that $70,000 to $80,000 range, which is where I think Bitcoin is headed over the next few weeks. So of course there are no guarantees, but I do think that given the way this market is just hovering right below $58,000, I wouldn't be at all surprised to see a break above that level over the next few days, perhaps even the next few hours, because even as I'm making this video, you can see where the market is starting to move up again to challenge $58,000. Next up is Ethereum. And this market also looks constructive. It's lagging a little bit compared to Bitcoin. However, over the last few weeks, we do have this channel, this ascending channel that I've been talking about on Twitter. So right now, it's unclear if we are going to get a full retest of channel support, which is right now right around $1,700. And you can also see how this is a confluence of support based on this level here. It's also a key horizontal level. All right, so 1700, there's a lot going on there. I would love to see a retest of that for a buying opportunity, but it's unclear right now if we'll get that. Now, one indication that we could see a move to 1700 is earlier today, we did get a 4-hour close below 1760. This was the first 4-hour close below that level. You can see where it has held on the 4-hour chart over the last few days. So if this 4-hour close is material, we could see Ethereum move lower, retest that $1,700 area before moving higher back toward this channel resistance. But as I mentioned, it is unclear as of now if we'll see that move lower, because looking at the daily time frame, the daily chart is still holding above that level. All right, so you can see we're on the daily. We have not closed yet below 1760. So a lot of this could rely on where the market closes today over the next few hours. Just keep in mind, and this applies to all of these charts that we're looking at today, with the weekend coming up, things are a bit more uncertain because volume tends to trail off on the weekends, so they're a bit more unpredictable. However, with that said, even if we do see a pullback this weekend, I think that by Monday, we are going to see the markets rally once again. So the weekend might be a little bit unpredictable, but things are still bullish, and I still believe that dips are buying opportunities. All right, so looking at VET, we did have a massive rally yesterday of 10%. So from this breakout of this descending channel, okay, from this low down here, this was about a 10% rally. Now, since that time, VET did come off quite a bit. You can see this big 4-hour candle right here. But one thing I want to point out is if you look at the last time that VET tested the channel support down here, all right, so if we use our fibs and I draw from this low down here up toward this first high, what you'll notice is that VET found support right at the 618 fib. Okay, notice this low right here. Now, if I do the same thing on this latest retest, okay, so from this low right down here up toward the recent high, look at where VET found support. Once again, right at the 618 fib. So this makes me think that this low right here could be in. Now, we could still see a little bit of a pullback here, but I do think that this low down here should hold. So we'll see how this goes over the next few days, but based on the rest of the market, I do expect VET to continue gaining even if we do break down from this channel. I think that this 6 cents area is going to be critical. All right, it's a critical support level. You can see resistance back here. We've broken out from this area. And again, I do think that this low should hold for that move up into 7.5 cents. And as I've been saying on Twitter a lot recently, if you look at Cardano and VeChain, the relationship they've shared since 2018, there's a good case to be made that VET is catching up to Cardano ADA right now. And if you do the math, it actually puts VET at about 16 cents. Even if ADA does pull back, even to like 85 cents, it still implies a VET of about 10 cents over the next few weeks. So that's just my opinion, but I do think that VET is headed for at least 10 cents over the next 2 to 4 weeks. So right now, given the fact that it's sitting right above 6 cents, I do think that it is an incredible opportunity. Of course, that's just my opinion. And lastly, we have ADA Cardano. So I talked about this in a recent video where I said that this market has had an incredible rally since December. So looking at the December low, you can see where this rally right here ran for about 1,000%. But the one thing about a market that outperforms like this is that when you do get a pullback, it tends to lag. And that's exactly what we're seeing right now, where VET is taking off and ADA is still consolidating. So looking for key support levels, you can see where this area just below $1 was resistance back here, and it then flipped to support. So I think anything below $1 between 90 cents and $1 is a good buy for ADA. There is a chance we see a deeper retracement than that toward 80 cents. But again, I think that anything between 90 cents and $1 over the long term is going to be a good buy for Cardano. And one more reason I think that area between 90 cents and $1 is critical, so right around 95 cents, is looking at the fibs from this December rally, okay, up toward that recent high. You can see where the 382 fib right here lines up exactly with that level. Okay, so we may see some further downside from ADA toward this 95 cent area, but a retest there should start to send the market higher back toward some of these highs. And as we know, once Cardano really gets going, okay, it can move very, very quickly. So notice the consolidation back here and what happened afterward. Right now, we have consolidation. So guess what happens afterward? Just my opinion, but I do think if we see a retest of the 95 cent area, that could catapult ADA much, much higher over the coming weeks and months.